I mean, I've been around entrepreneurs my entire life. And I was, 13 or 14, I actually went to like garage sales to buy items and like flip them on eBay. And you can put that into a smart contract. And that removes all of the overhead. At the end of the day, all a blockchain is a really efficient accounting ledger.
Hello everybody, welcome to the Web3 Business Show brought to you by Tokenminds. My name is Rob, and as usual we're providing you interesting stories, background within the Web3 space to inspire, educate you, give you ideas and opportunities to advance in crypto Web3 and the blockchain industry. Today we have a very special guest, from Zyvo, who is a co-founder, and Zyvo is a real-world asset credit protocol disrupting predatory high-interest consumer lending while bringing yield for consumer loans on-chain. Hi, welcome.
Yeah, hi. Thank you so much for having me, Robbie. I'm looking forward to chatting a little bit about what we're doing.
Yeah, of course. Yeah, it's quite a mouthful, but it already sounds quite interesting. But let's start with your background first, right? Because it's not every day we're talking to co-founders that are just like recently going into the professional space and then choosing Web3. How did how did this kind of come about for you to co-found Zyvo?
Yeah, so I've been involved in Web3 for, quite some time now. So originally I got involved in 2017, actually. I'm sure, everyone who's been in the space kind of since then remembers when we had the really big run up then. Probably kind of like a lot of folks that kind of drew me in initially, seeing kind of BTC and ETH kind of having a run. And, like a lot of folks who probably got in at that time, after the crash happened, wasn't quite as necessarily exciting in terms of my portfolio, but I was sucked in on the technology. And ever since then, I have been, involved in the space as a user and more recently now as a founder of Zyvo. So it's been a kind of really exciting time to build in the space. I think there's been a lot of ups and downs, but I think we're really beginning to kind of enter into a really promising phase in the space.
So did you actually, because I see on your LinkedIn, you're also still engaged at a day job. So is this then, how did you make this transition, right? So you were excited about the space from a personal perspective since quite a few years. And now you decided to start your own project. How did you get started? Did you start it next to your day job? Did you quit how did the transition work?
Yeah, so I think probably what you're seeing on LinkedIn is you're probably also seeing Zinclusive. And so one of the things that, I can kind of maybe extrapolate kind of in my journey and how all of this got started is, so as you kind of mentioned earlier, I'm on the younger side in terms of founders. And I originally got into all this actually, maybe kind of give a little background, kind of, you mentioned what we're doing is focusing on disrupting high interest consumer lending. Well, in the US, there is a $250 billion high interest consumer lending market, of which a third is non-prime, and within that segment, about $20 to $30 billion in loans have triple-digit APRs. And I got involved in this originally actually because I had some family that was actually in high-interest lending. And we kind of got together and went, hey, there's got to be a better way to approach this industry and do so in a manner where we are helping people and still kind of generating yield. And so that is where the idea for Zyvo was originally born from. And you're probably seeing on my LinkedIn, as I mentioned, a company called Zinclusive. And we actually started out as one company originally with Zinclusive, and we split into two. And the reason being is that allows us to lend compliantly in the United States. And so that is not necessarily my day job, and I founded Zyvo on the side. Both of those are kind of things that we are working on full time.
Okay, so that is like for legal, like regulatory issues that you have basically two, let's say, incorporations there.
Correct, yeah.
Okay, And in terms of like your entrepreneurial journey, right? So you were I assume out of college, you were a financial analyst. I'm not sure that was then an internship, but it's still quite a quick transition. You came, with your family, that you guys had an idea and you just started this. It's quite a jump still, I think, really, to decide from, can I call this a corporate job? I'm not sure if that's the right wording there, to jump into this entrepreneurial field. Can you tell us a little bit more about that?
Yeah, I mean, for me, it really hasn't been that much of a jump. So, I mean, I've been around entrepreneurs my entire life, within my family, and then also just kind of within my social circle. And I mean, when I was, 13 or 14, I actually went to like garage sales to buy items and like flip them on eBay. And I did that for a really long time. And then I transitioned into actually like buying and selling domain names. And that was right about the time I kind of got into Web3. I had been flipping kind of domain names. And to me, kind of what originally got me really interested in crypto was it was for someone who had been really focused on, you kind of think about it as like digital real estate in terms of domain names, the kind of light bulb went off when I originally kind of learned about blockchain and Web3. And so from kind of there, as I mentioned before, I've been in the space for a very long time. And, for me, I think, as you mentioned, it is a leap, but I think it's a leap I've kind of been preparing for in a way kind of my entire life.
All right. So you were already basically actively doing business, as an entrepreneur, learning the ropes. Through this, is that your main business you did before, the trading of domain names? I remember from years back that was kind of a thing, and I'm sure there's still there's still the whole industry going on. I'm sure it didn't die out at all, right? Like, what did you learn from that experience, basically, that made you ready for this new one, potentially?
I think one of the things, kind of when you talk about, entrepreneurship in general, it's how to deal with uncertainty and make decisions with limited information. So like if you think about a domain, right, and you're trying to broker a sale, for instance, between like a buyer and seller, and you're trying to put a price on a domain, well, there's all sorts of kind of pricing tools out there that'll kind of go, hey, a domain's worth XYZ. But at the end of the day, the value of something comes down to what someone's willing to pay for. And so you learn a lot of skills, even doing something like that, and how to negotiate and how to begin understanding how to price something and actually kind of work between different parties and kind of manage, in a way, relationships. Because I think at the end of the day, one of the things in crypto, that you see a lot is there's a lot of relationship management going on. Everyone's very big on business development, and you kind of have to juggle different parties and different interests. And I feel like I learned how to do that originally from, in a way, kind of doing domain sales in a way, because, as I mentioned, you kind of have to deal with buyers, you have to deal with sellers, and you have to deal with, information that is very imperfect, and you have to deal with people's kind of egos and feelings. And I think that translates really well into Web3 and also just business in general.
So is that then considered like a B2B sale, this domain? Is that like how this business works, or were you selling directly to consumers?
So it was doing two things. First and foremost, I was working with folks who were looking to buy domains for the businesses, and kind of going out and finding out who actually own these domains. So one of the things with domains is a lot of people use privacy services, and so they kind of obfuscate their personal information, because with domains there is kind of a thing where you have to register your domain with ICANN and WHOIS, and you have to give them your personal information. And so you can kind of actually go on these sites and look up who owns any domain. But a lot of domain kind of brokers or registrars, such as GoDaddy, offer privacy services to where you can't actually find the personal information of a person who's owning the account. And so you have to use kind of different tools to actually kind of understand, okay, who's the real person that owns this domain when that information isn't public. And so one of the things I used to do a lot was use something called the Wayback Machine. And for those who aren't familiar, the Wayback Machine is a project that archives the internet. And I used to use that a lot because what you could do is, for instance, like let's say someone had a business, right? And they were using a domain for something. And then let's say that business, they shut it down or something else. And then someone else came along and wanted to buy that domain. And let's say the person who's owning the domain, their information wasn't public. Well, you could use things, for instance, like the Wayback Machine to go back and see when the web page was actually last active and begin to kind of understand, okay, who might actually be the person who owns this. And so you could reach out, for instance, for the contact information on the person who was kind of listed on the page on the Wayback Machine. And sometimes, that person was the owner or knew the owner or could kind of point you in the right direction. And so things like that, I think, are even really applicable to blockchain, because if you think about blockchain, and in a way it's almost a better situation because you have such transparency around the data, a lot of times you got to go hunting for what you're looking for. And you've got to go kind of look on chain to find pieces of information. And so for me, I really enjoy kind of that. I enjoy being able to go out and kind of hunt for information and kind of solve puzzles. And so it's something I've always really enjoyed, whether it be kind of dealing with domains or, buying and selling things at garage sales or, even in the Web3 space.
Right. Because that space is a bit more mature, I think, especially compared, right, to the crypto space. So what you're describing is really the supply side, right? But what about the demand side? How did you just log into a system where they just provided, okay, we're looking for these domains, or did you have personal relationships somehow that will saying, oh, can you get this domain for us, stuff like that?
A lot of it was just personal network. People going, hey, we're looking to purchase a domain. And so that was kind of one aspect of what I did. The other aspect was I would kind of look for domains that were maybe at auction or something else that I felt like I could purchase at a reasonable price and kind of take a bet or a gamble that, if I was able to buy it at auction for a certain price, that a year or two down the line, I'd be able to sell it for more money. So, a lot of people have probably heard the term like domain squatters. And, that's something I kind of did for a little bit, where I would go out and try to buy domains that were either expiring or, buy them at auction for really cheap and just sit on them and eventually flip them. And so there's kind of two aspects to what I did. It was that, and then also kind of matching people who were looking to buy a domain with kind of someone who was sitting on a domain and, maybe wasn't that super easy to reach.
Understood. Switching to Web3, right? So there has been some developments in the handshake domains for Web3. I think a couple of big providers are adopting them as well. What is your take on that? And do you think there's a future for that in the domain space? What are your thoughts about those handshake domains?
So I'm not as familiar, and it's kind of funny given that I kind of started a lot of what I learned in entrepreneurship kind of dealing with domains. I'm not as familiar with domains in kind of Web3. So clearly there's things like Ethereum name service and all these other things, which I think are very cool. And I think they have a place, because one of the things with domains that's kind of tough is a lot of people are just sitting on a massive amount of domain names and not doing anything with it, because they're just squatting on them and hoping someone comes along and offers them a bunch of money for it. And a lot of these folks, bought domains, in the late 90s, early 2000s, when you could get things for super cheap, and they don't have an incentive to kind of move those domains. And so for something like ENS, it's just kind of bringing a new aspect into the market. And I think, when we talk about building, Web3 native apps or protocols, we should have Web3 native domains.
Yeah, no, exactly. I think that the main point of handshake domains is that it uses obviously their own DNS servers, and it's basically it's a domain registration based on the blockchain, and now it's being sold through companies like Namecheap. I'm not sure GoDaddy. So you do have to use your custom DNS server in order to kind of access those type of domains, but they are registered through the blockchain, accessible through the blockchain, and it seems to be getting a bit more mainstream. At the same time, there is a little bit of pushback, because a lot of applications, they are able to anyway directly bypass DNS systems. But it's kind of like a hybrid. So if you want to be able to access that in a normal way, like any dApp or something like that, you could do it, but you need a browser plugin to access that. But you're sure that you cannot be taken down by any malicious centralized DNS system or something like that. So in a way, it's just a kind of following the trend of decentralization in different areas in space, right? So not just decentralized storage and information processing, but also actually the domains itself. So it's an interesting topic to follow for sure. Let's go back to Zyvo, right? So you mentioned you came from a pain point that you found in your family or your family business, people trying to access loans, getting unfair rates, and we want to solve it with the blockchain, right? So what made you feel that the blockchain technology can be a good opportunity of help for this situation?
Yeah, for sure. So back in the early 2000s, there was a company called Lending Club, and Lending Club is kind of the like OG peer-to-peer like consumer lender. And what Lending Club allowed you to do is you as a borrower could come to Lending Club, apply for a loan, and then kind of on the supply side, anyone could come to Lending Club within kind of certain parameters and actually fund these different loans. And they ended up pivoting their model though, and they went from a model where it was true kind of like a peer-to-peer model to where they just went, to hell with it, let's just go out and get a line of credit from like a big hedge fund on Wall Street. And part of the reason they did that is kind of the financial plumbing. So if you think about it, and you think about it from a TradFi perspective, and you have, let's say, all of these different kind of people looking for loans on one side, and you have all these different people on the other side looking to kind of supply capital, you have to have a whole bunch of different bank accounts and things in between those people, because you have to kind of make sure funds are segregated correctly and ensure all of these different things. And that adds a lot of overhead. And so when you think about it, at the end of the day, all a blockchain is a really efficient accounting ledger. And, it's a bit of an oversimplification, but in our use case, that is, really what we see it as. And so you were able to take all of the financial kind of plumbing that you would typically have in, let's say, something like a Lending Club model, and you can put that into a smart contract. And that removes all of the overhead. And this is an idea that's been around for a long time. And one of the people that's backing us is a guy named Andrew Keys, and he wrote an article in like 2014, I think, when he was at Consensus, about kind of how lending contracts on chain were kind of one of the killer use cases of blockchain. And that's really what we're looking to recognize.
Yeah, that makes total sense. I think and you mentioned also the real world asset side, that basically links to the fact that those loans eventually are not basically issued in crypto. Is that correct? They're eventually issued actually in normal fiat currencies.
Correct. Yeah. So we work with Zenclusive to actually make sure these loans get to consumers. So from a flow of funds standpoint, what's happening is Zyvo is actually lending capital on chain to Zenclusive. Zenclusive is taking this capital off chain and using it to fund consumer loans. Those loans are then placed into an SPV, which, for anyone who doesn't know, is really just a legal entity set up to custody assets. And Zyvo has rights to this SPV. And so these loans are actually being issued in fiat to consumers. And part of the reason we're structured this way is, 99.9% of the population is not going to kind of go through the hassle of going on chain, filling out kind of a loan application, getting a loan, and then taking that capital into fiat where they can use it. So for us, we want to meet people where they're at.
Right. And you guys have been pretty much, you started around 3-4 years ago, right? What have been some of, let's say, the challenges to overcome? And maybe we can link that to like actual, kind of tips, inspiration to fellow people in the space that want to start a project, running a project, trying to be successful. What have been some experiences, learnings in that sense?
Yeah, so I'm going to speak about this kind of from an American standpoint, because I think some of the most challenging things we've had to deal with are unfortunately kind of exclusive to the United States. So for us, getting to where we are, and I have to update my LinkedIn because we actually haven't been around for 3 or 4 years really. But with what we are doing, the thing in the United States, and even today you saw that OpenSea, for instance, was served with a Wells notice by the SEC, is it's, and excuse my French here, it's a pain in the ass to build in the United States. You have to jump through a ton of hoops. We've spent a ton of money on attorneys, and it's just really difficult from a compliance and regulatory standpoint to build a project in the US. And I think that has been kind of our biggest pain point or hurdle to date. Um, and so, I don't know if this is advice or not, but I would say this is, if you can, avoid in a way building in the US, I would probably recommend doing that.
Okay, understood. Yeah, in regards to financial infrastructure, I can kind of say the same. I'm not sure if I can say the same about Europe. There has been regulations on crypto specifically from the European Union. It's not necessarily related to DeFi or financial kind of infrastructure like you guys are facing in the United States, but from a crypto standpoint, there has been also several kind of new rules and regulations which might make it potentially harder. They have been harder also on, for example, exchanges and KYC. So yeah, for sure, I agree that doesn't help innovation, and that maybe that means that, for example, Asia specifically maybe has some advantages there, or maybe even the Middle East. But yeah, I do get your point totally that from a historic standpoint, the financial markets are most mature in the US, and that means that there's most regulations, and that doesn't help these kind of new innovative initiatives that you guys are doing, that kind of almost blocks your progress in a way. Is that correct?
I don't know if it necessarily, it's an impediment, but I think there's a reason for that impediment to be placed. To your point, when you have really mature financial markets, is you clearly don't want to break things, right? And so regulators are understandably cautious when it comes to kind of new ideas. And one of the things, especially with kind of financial services, is the technology can get really far ahead of where we are from like a regulatory standpoint, because we're at a point in time where I think the technology is actually capable of doing a lot of really cool stuff, but the regulations just haven't quite caught up yet. And I do think we're going to get there. And while it's not always super fun being a builder in the US, I do think, being that it is the largest capital market in the world, and there is such an addressable market when it comes to the need to address high interest lending in the US, is that, we're really happy with kind of the route we took in building in the US. There's been a lot of challenges, but I think at the end of the day, it's also an advantage because we have positioned ourselves to be able to actually kind of work with companies in the US and do so in a compliant manner. And I think, once we get further along and we get regulation for the space, those kind of companies that are positioned for that are going to have an advantage in the future.
Yeah, no, for sure. It's definitely also a double-edged sword, right? In a way, the most mature market in the world will have more regulations, a bigger history of regulation around it, but also you have more access to different, financial infrastructure that you might need for your project. And what you're saying, it might, like, I know that, for example, Trump, right? Do you believe that a candidate like that, who, he is kind of following the industry, there's money in this industry, obviously. Do you think he might ease up things, or what are your thoughts about that?
So I don't love getting super into politics. I will say this. I do believe Trump is probably the more crypto-friendly candidate, but I also don't believe he's doing it like altruistically because he like believes in crypto or anything. I think he just, sees an opportunity to potentially get some votes, and that's kind of why he's doing what he's doing. So, do I think he might be more friendly to crypto? Yes, but do I think people should vote for him only because of that? No.
No, absolutely not. I wasn't getting to that. I think the the thought, the hope is for many people in crypto that there might be more kind of lenient regulations, and I think the crypto space in the US is definitely quite strong, and there seems to be some openness for Trump. So if he gets elected, that might be good news, right? Potentially. So we'll have to wait and see, I guess.
I will say this, I had an opportunity to go to Washington, D.C. with Stand with Crypto, which is an advocacy group advocating for kind of better crypto regulation in the U.S. And we had a chance to meet with kind of lawmakers on the Democratic side of the aisle. And I do think there is beginning to be more and more reception from folks to this industry and kind of what we're doing. And so I think we are going to get to a point, regardless of who is kind of in charge in the US, where we get regulation for this space. I unfortunately just think that, what happened with FTX and all of that probably set us back, 4 years on that front, because those guys were super politically active and, clearly all saw how that ended. And I think that kind of just left a bad taste in a lot of people's mouths.
Yeah, that's an excellent point indeed. Puts it together. Well, thank you so much I highly appreciate it. We're definitely gonna follow Zyvo, and it's for sure an interesting growing space. We have talked to several projects in this particular space as well. So yeah, great stuff. Maybe we will do another episode, but thank you so much for now, and also thank you everybody for listening and watching. Goodbye.